The legend of the exceptional resilience of the US economy seems to have been misleading. The market's return to the harsh reality has been quite painful. For instance, Wall Street is down a 9.5% drop this week from its February 19 peak, and the US dollar has fallen to 4 months low. As Donald Trump's trade policies increasingly push the US economy into recession, the American currency is also losing its appeal, including as a safe haven asset. Meanwhile, the euro and the British pound have rallied, and expectations of increased defense spending in Europe. You are watching Traders Calendar. Most of the reports scheduled for Friday, March 14th will focus on European economic data, and the statistics do not promise enormous support for the euro. According to forecasts, the data could send mixed signals to the common currency. Germany's annual inflation rate is expected to stand at 2.3%, and this means that February's report should mirror January's figures. Meanwhile, core inflation, which excludes food and energy prices, is forecast to come in at 2.6%, the lowest level since mid-2021. With such figure, the euro is unlikely to rise, although volatility could increase. In addition to the inflation report, data on a wholesale price growth will also be released. Experts are forecasting a solid increase. The 0.1% gain in December was followed by a 0.9% rise in January, and the February's figure is expected to be 1.4%. According to the Federal Statistical Office, that's the largest annual increase since April 2023. In the month-on-month terms, the wholesale inflation is accelerated by 0.9%, marking the largest increase since September 2022. The euro is likely to respond to these elevated figures with a rally against other currencies, particularly the US dollar. A similar roller coaster awaits the British pound on this day. On the one hand, the UK economy may record a decline in the GDP in January. While GDP grew in December, the first month of 2025 is expected to reverse this trend, with a slide from a 1.5% to 1.2%. Given the trade war initiated by Donald Trump, the continued strong growth of the UK economy remains in question. While a decline in the GDP will almost certainly lead to a weaker pound, the industrial production report may slow or even reverse this trend. According to forecasts, this sector of the UK economy is expected to slow the pace of its decline. In other words, while still in the negative territory, the figure may increase more than a double from a minus 1.9% to 0.8%. The main pressure are still weak domestic demand and expensive raw materials. Amid the recent events in Europe and the standoff between European leaders and the US administration, the market's attention may turn to the inflation report from France. The final data for February is expected to show a decrease from a 1.7% to 0.8%. As a result, the euro may react to the report with losses as well. The only significant economic report from the United States on this day will be the University of Michigan's Consumer Sentiment Index. Based on a forecast, the indicator is expected to show another decline, this time to 64.3 points. Therefore, the US dollar is likely to end the trading week without any support from economic data. Please note that the publication times are set in the GMT plus 3. The next video review of a trader's calendar will be released on Friday, March 14th. And now, we wish you profitable trading. Subscribe to our channel and follow news with us, and see you soon.